Now, one of the things I noticed about the way you sort of analyze charts, which I think is really interesting, is it seems like you have a hierarchy of importance. And the
Yes,
first and foremost importance is price action itself. So you're going to analyze the highs, lows of candles, and
yes,
the breaks of absolute price levels are the most interesting thing to you. And then
yes.
the secondary piece in this hierarchy is the moving averages, the conditional stuff. And then I wanted to ask you, we go back to maybe Anka's charts. What is the oscillator on the bottom? What is that? How do you use that? What is that for?
Okay, so yeah, good question. So this is a William percent R. I have been using it for a very long time. This is typically an indicator that I use for stocks. It also super helpful in futures indices that where I notice divergencies, I kind of like gives me a heads up when to buy the dip and when not to buy the dip. So it's an indicator that is really easy to use. For example, it has two levels right here. It has the minus 20 and it has the minus 80. Everything that is above the minus 20 is into overbought, and everything that is under 80 is oversold. When you
Mhm.
want to buy the dip, for example, you want to see a confirmation, for example, of a low and a higher low. So for example, here, this is an oil, and this is why I have been bullish all this time in oil, because it hasn't really gave us any kind of clue as to a topping sign. And I think it's a really high demand with everything that's going on, and it still has room for the upside. I mean, look at the context of this sideways range. So going back to the indicator, I would like to see a low and a higher low, and that would be the time where I would look to buy the dip. This is super helpful for example, when the market is into a lot of pressure. When the market, for example, through the pandemic. So I could give
Right.
you an example with for example, with the mini S&P, and I can put it I could put it on a weekly chart. So we can have the pandemic high and low. Let me just take these lines out. All right, so as you can see here, okay, so we have this low right here. This is actually like a head and shoulders. So you're reading the same kind of patterns into
Wow. So
this.
you will apply pattern analysis to the indicator, to the derivative, as well as the
Yes,
underlying price.
yes. Because I am a trend trader, I'm looking for all the clues that any chart can provide me in the sense of volume, in the sense of William percent R, in the sense of rotational patterns. So I saw a really big pull to the downside, and this was, let me just zoom in here a little bit. All right, so here it is.
Hmm.
So once, and this was actually the the pandemic low, but it was not the exact low, because you can see that we had a little bit of surge. So following this low right here, so I started to be very bullish on here. Let me see. I don't have the date here. Okay, so here it is in March. So it happened at I can tell you exactly when it was, because I that's when I went long. It was on March 26th. So I had the first break, so it didn't happen. This was a consolidation week. It was a digestion week. So basically, we remained within the parameters of the high and the low. And then the following week, this was the entry price. This was the stop, and then targets came into prior lows. Again, these bottoms now become minor resistance areas because they are upside down. So for example, they're not trending higher, but they're upside down. So prior support that now becomes resistance. And this became the target one area for that reason. And then the target two, again, into these prior highs again, and then up we go. And once we have the consolidation above the 10 EMA, 10 EMA is a dynamic moving average that I have been using. Again, like these moving averages have been using for as long as I can remember trading, through 20 years.
Sorry, can I stop you here and just can you go through the moving averages that are this your bread and butter? You have a 10. What else?
Absolutely. The pink one right here is the 10 exponential moving average, and it is the only exponential moving average. When the price is really strong and ongoing and trending powerfully, it really follows. So the 10 EMA really follows the price.
Yes.
Then I use the 20 simple moving average, which is more of a magnet type of trade that I used it in day trading. So any kind of pullback in an ongoing trend into the 10 EMA, it's likely to rotate off of this level. Then I use the 50 simple moving average. I typically like to use the 50 simple moving average, not as much into day trading, but I use it for swing trading because we have pretty good hefty pullbacks into the 50 simple moving average, and especially if they line up on the daily charts or the weekly charts, they're really good. And these are, for example, pullbacks that are a little bit more significant than the pullback into the 10 exponential. And then I have the 200 simple moving average, which is the king of all moving averages. And this is kind of like the line in the sand. It's bullish above and bearish below. But again, if you're getting a rotational pattern along with, for example, a read and the Williamson R into the oversold, then you will look to see, hey, how is this going to impact the price? And you can see here that the 200 SMA was the lid. So it was the resistance. So it was resistance on this candle, on this candle, and this candle. So it was obvious that a break above is really going to start moving the price a little bit higher.
Yeah, you can really see that. I mean, the S&P was one of the greatest V bottoms in the history of trading.
Exactly. So yeah, and again, you know, if you're looking, for example, what happened in the last couple of weeks now, so we have been trading off of the 50 simple moving average. So tap here. So first of all, let's go a little bit back. So tap here, and rotational. Look at the rotational patterns. Around the 50 simple moving average. So the price kind of has favorites, and at one point or another, for example, the S&P likes the 50. NASDAQ, for example, likes the 20. So each index has its own favorite, and right now, any kind of close above this 50 SMA is going to be super dynamic and launch the price higher. So
wow, that should be. So is this today? Is this where we're at today, right now? Like So today could be a very telling day because we're basically, if we hold above the 50, that could be a very bullish signal on the S&P.
Exactly. So we have already issued a continuation here. So the high from yesterday was 44.3725, and we have already triggered higher. So in terms of continuation patterns, we're looking for, you know, an extension higher into the 60-65 area, at least into the prior high.
Right. Super. Very, very
nice
interesting. All right, guys.
Yeah, nice head and shoulder. Right shoulder, head, left shoulder, and this would be the neckline right here. So this is setting up for a breakout.
Yeah, really interesting chart. Thank you so much.